Okay. Any better? No sound yet. Nothing at all. There. Holy. All right, here we go. Now we've got time to make up, folks. Thank you. That was such an awkward little moment for all of us. An awkward moment. Awkward moment. For me to sit here looking at the camera for 5 minutes going, All right, here we go. Now we've got to make up for lost time here. So, interesting morning here we've got. Good morning to everybody. Thanks for hanging in there with me for a couple of minutes here. We got that figured out. I'm not sure what it was. Every once in a while, it's a nice microphone. I mean, it's a really nice mic that I've got here. But every once in a while, it goes a little skitsy on us. So it is what it is. We adapt and we overcome, just like we do with the market often. So let's talk a little bit about what's going on in the market. Even though we talked about in Friday, another bonkers day, we got to close out some great positions in the night trader. Looked at it, and honestly, I went I went out to relax on Friday and thought to myself later in the afternoon, evening, boy, this is going to come back and get us on Monday. Not true. Now we're seeing another wave come in. Obviously, a few drivers at that we're going to talk about this morning. Also, bifurcated market. I want to talk about the two different markets that are starting to form here right now. And we are going to see a little bit more of an extension of this. The canoe is moving. It is set back by golf right now and a little camping here and there. But the canoe is moving. Everything's been planed, and I'm in the process now of some of the more intricate work that it's no fun. Anyhow, one of these days we'll have to have pictures that bring you up to speed with it. As Greg just pointed out, the Q&A button is live. So any questions you've got, let me explain what we'll do with the Q&A. Any questions you've got that are a little more in depth, what do you see happening with the airline stocks over the next week? What do you see happening with this? Yada, yada. Something that starts with a what, why, how, that type of thing. Put it in the comment. Put it in the Q&A. When we get down to the ticker blitz, which is what I'm calling it from now on, it's a ticker blitz. When you guys give me the tickers, we're going to keep that in the chat because it's a little more fluid, and boom, boom, boom. So when I tell you ticker blitz, boom, you hit them with the chat. Let's get into today's slides real quickly. I want to keep things moving because we did get a little bit of a delay here this morning from technology, of course. So Free Flow Monday, what? Yes, I want to spend a little more time. Friday was great. Want to talk about Friday a little more with from the perspective of, or I want to take what we did on Friday and expand on it. And I said we should do it again, and that's what we're going to do. I'm going to talk for a little while this morning, and then we're going to jump into it. You can see our fourth bullet down there, your questions and the ticker blitz. First thing we're going to talk about, crude oil. It's opening up another level. We talked about that OPEC Plus meeting. What happened with the OPEC Plus? What is going on with the oil right now? How far is it going to go? What companies are you going to be long right now for the next couple weeks? This is not, I didn't realize we're the only ones that can see them. That's actually a good point. Greg, we'll have to talk about that. The bifurcated markets, techs versus economic stocks. So there's a big chasm right now, and this is that bifurcation of the market where their tech stocks are now kind of starting to pull back and reel in the morning. The basic materials and some of these economically sensitive stocks, except the banks, are starting to come back up again. So you've got these two different markets. What do you do with it? That's what I'm going to tell you today very quickly. Then we're going to do your questions in the ticker blitz, and you know what? We can just we can keep the questions, but let's try to keep the questions to when I tell you guys. Let's go with questions. Otherwise, it gets confusing. Too many shiny objects. And then trading today's tape, we're going to talk about real quickly. So here we go. This is what I said last week, and this was, I believe, Monday of last week. This is the exact slide. I actually went out and picked up the slide from last week. The rally in Brent above $40 for the first time in 3 months is coming under pressure. The reason it was coming under pressure is because of that OPEC Plus meeting. They hadn't said, yeah, we're going to get together. We're going to get on do the Zoom or the video chat and hash this out. and it continued to be delayed. It was scheduled before the 6.3 or 6.4 rather. So what happened is we saw oil kind of go a little sideways last week, and then boom, meeting happened, announced they were holding back the production until July. All the orders that now get put in for July can be put in based on that production holdback. And what that is done is opened up now a path to $50. We broke above on Friday, that $40. You can see how we just kind of stayed sideways there. Didn't want to go anywhere. Look at this. We are overbought. That's got some concern on me. But right now, there is a push. There is a flush of people going into oil because this meeting got out of the way. This little rest that we had right at $40. And I mean, it's uncanny the way that we didn't want to draw a line above that. As soon as that OPEC Plus meeting got resolved, boom, we showed up to 42.50. Oil's trading higher again this morning. That's going to be the play this week, folks. We're going to see oil maybe not trade up to $50. It's going to make a reach up to that $50 mark, whether we're overbought or not. So in this particular situation, this is one of those times when I have to kind of just wince, close my eyes a little bit, not look down at that overbought, because the momentum and the volume is going to pick up in the oil trade here, and it's going to move higher. So that decision last week opens up room to move to the $50 level. Energy companies are benefiting from another round of that buying, not selling. There's a typo for you. Remember, this is one of the most technically traded areas of the market. I did something on this it was in the fall, about the oil companies and energy companies, various oil and energy companies, whether they be natural gas, et cetera, et cetera. They are, one of the more technically traded groups. And it's because you've got two different things you're looking at. You're looking at the technicals of the oil trade, and you're looking at the technicals of the individual companies of that oil trade. So companies like Occidental, which had been held back, Jerry was pointing out, it went through the roof for us. If you were holding on to that position past the open yesterday, you were up around a 250, 260% gain. Doesn't happen all the time. It's nice when it does. Doesn't happen all the time, though. Amen to the Windows audio problems, by the way. I knock on that one for sure. Anyhow, so oil trade this week, even though they're very technically sensitive, that overbought is going to kind of be put on hold just because you had so much buying that was waiting for this decision to happen. So the oil trade's going to continue. XLE, HAL, Halliburton, CVX, Chevron, and Occidental right now are the three companies that I am looking at. And there's your answer, Naveed. Occidental, still looking at that from a perspective of the chart is going to tell us, and you'll see that this one-day move in Occidental, and let's go ahead and get those bars wide open for you here so you can see them. But that one-day move in Occidental on huge volume. This is some great volume that you saw come in, was because this stock has been pent up for so long that it literally, this one-day move jumped it obviously into overbought territory above 20, but you still got a target, in my opinion, of $23 on Occidental right now. $23, and that's going to come fast. That's one that you look at possibly trading in this oil trade, because this is going to be fast, furious, and aggressive. You want to trade it a little bit faster. And this is one of those circumstances where I look at some of the weekly options, maybe an option that's 2 weeks from expiration right now, that's a 20 strike, or maybe even a 21 strike at this point, where you're just a little bit out of the money, get a little more of that convexity working for you. But that's how you play the oil trade right now. You continue to look at the other side of that trade, which is saying that, okay, well, if the oil is jumping right now, we're going to see the Brent contract go up to $50. I'm going to expect to see maybe the USO shoot somewhere. Notice that it moved above its 50-day. I'm going to look for somewhere around a 33 or 34, maybe even a 35 on the USO. That's the point where you get out. You watch out where this trade starts to roll over, because as I said before, technically traded, it's one of the most technically monitored areas of the market. As soon as we start to see some selling come in, and that's going to be when Brent touches up on $50, that's when you want to flip, start putting some hedges on it. you can grab this both ways, because now you'll see a move back down to 45 or so, and then a move back up to 50 or so. But keep in mind, we're going to stick in a trading range until we hear from OPEC Plus again. So at this point, make hay while oil's rising, because this is going to be a situation where the long-term trend is not going to be the upside for oil. Breaking above the 50-day is great and fantastic, but I just don't see oil continuing to move up above $50. Quite frankly, that's where they'd love to have a little bit of an equilibrium right now. And by they, I mean OPEC Plus, simply because at above 50, that's when we start to open up all our shale operations and our offshore drilling. Those will get busy again. So watch the resistance at the $50. XLE, Halliburton, CVX, and Oxy are the ones that I'm looking at to benefit from. Oxy is up over $23 in the pre-market. Has been a very strong, actually not strong up until Friday, but has very strong just because of that. I always use this analogy when I talk about stocks that did what Occidental did. So you've got a beach ball, you've got a lobster buoy. If you spend a lot of time in Maine the way I did, you've got whatever that's a buoyant thing, and you push it down, and you just hold it down under the water. And eventually, the more you push it down, the more it wants to come up. And when you let it go, it shoots straight up through the top of the water, hits you in the face, or hopefully if you got your face out of the way. That's what's going on with the oil trade right now. It's been a compressed spring. It's been a beach ball under the water. Boom, it's going to pop up, but it's going to just get above the surface and then start to roll back over again with oil. Watch $50. That's your mark to watch on the Brent future contract. So let's take a look up at the next side, the next subject, this bifurcated market. So over the weekend, I'm doing a little bit of reading, and, I've noticed this trend. I'm sure you've noticed it as well. I started looking at some of my charts, my intraday charts. We're seeing a market that's beginning to split. And that shouldn't be a secret to everyone. We've seen the Nasdaq futures even this morning. Nasdaq futures had been trading in the red. So we're seeing a market that's beginning to split. Technology leadership is on the decline over the last week. When you look at it in the mornings, and this is why I was looking at the intraday, when you look at the morning trades, you can actually see that we have selling in some of these big names, whether it's Zoom, whether it's NVIDIA, the larger tech names that are very much on people's radar screens. They're seeing selling in the morning, and then late day rallies have brought the tech stocks back. Usually the late day rally is the individual trying to come in and buy the stocks. It's the not necessarily my mom, but the individual traders. But there's clearly some selling going on in the morning, and that's a lot of people, squaring up. And if it's in the first 10 or 15 minutes, that is typically orders that people put in the night before. So again, that's your retail investor. But right now, that Nasdaq 100 has about 30% of its components in overbought territory. And by overbought, I mean deep overbought. RSI readings, 14-day RSI readings that are up in the 75 to 80 territory, not just the 70 area. So I always say it's not a problem until it's a problem, but you really want to be aware of how this is looking right now with the Nasdaq 100, because the area, and I said last week, and I was wrong because we took profits over 100% on Occidental. But I said our next 100% plus profit on in the night trader system would come from a put. I was happy to be wrong by closing out that call. But at the same time, this is the area of the market that it's going to come from when it hits. So you've got right now the Nasdaq 100 proxy, the ETF, trading at 240. Notice it took out those February highs. 20-day, 50-day, 200-day, everything's in great shape. You're getting overbought here, which is okay. We can tend to, and technology, especially the Nasdaq 100. And everybody thinks Nasdaq 100, well, it's going to be all technology names. No, it's not. You've got names, United Airlines, American Airlines that are in there. I mean, there are a number of companies that are in the Nasdaq 100. Sure, Apple's the top weighted company there, Qualcomm in the top 5, Intel, Cisco, Google, obviously, Facebook in the top 5. But when you look at those stocks right now, the number of stocks that are overbought, and I'm going over here for a reason, these are those overbought stocks right now in the Nasdaq 100. American Airlines, okay, it's going to go up another 7% at the open, though. United Airlines, Ditto. Sirius Satellite. Sirius Satellite, when you see the chart here, you'll see that it's taken a little bit of a skyrocket ride. Notice the open on a high and then a close on the low. Resistance at maybe that $6 to $7 range right now. Overbought, volume pretty heavy here, so it could push it higher. And that's what you want to watch. A lot of people ask me, hey, Chris, you told me that overbought can become more overbought. How do I know when it's just that sounds like a rule to cover your ass, basically. Don't tell me something that is true whenever you want it to be true and isn't true when you do. The one thing you watch is the volume. When the volume is going up, when the stock is overbought, that RSI is above 70, you can say that it's going to become more overbought because that is the herd coming into the stock. That is the flood of money that's coming into the stock. It's when you get into that overbought territory and then you see small little tiny volume bars for a day or two. That's when I tend to call it leaving it in a vacuum. The stock is now trading in a vacuum. There's no volume to push it higher. And sorry about that, John. And in this case, that volume, when it remains low, you'll see the next tick of volume coming in and it's selling pressure. That's when you worry about an RSI being overbought, when you see the volume drop down. So watch that volume along with the RSI. That's your technical tip for the day. Every once in a while, I should be putting these in, don't you think? We'll go back to a technical 101 type of approach here at some point. Anyhow, back to that chart, Sirius Satellite, heavy volume as we're going into that overbought level. Apple, not surprising anybody that it is overbought right now. Volume is certainly not as heavy as we had here. Keep an eye on Apple, especially when it's been doing this little dance right across 320. And as you know, Apple is like a lightning rod. It's one of those companies that everybody thinks to sell first whenever things get rough here. Comcast, Kraft Heinz. Who would have thought Kraft Heinz was in the Nasdaq 100, let alone being overbought? Well, that still goes to show you that a lot of these consumer staple companies are still in favor. By the way, on that note, somebody asked me, and you don't have to ask me. Somebody should ask me about Main Street. When I walked down Main Street this week, it was a little telling. People are starting to hit the stores again for some of the items that we were all collecting from the shelves back in March. All of a sudden, you're starting to see things disappear. And I actually asked somebody at the Kroger store, is this a supply thing? And he said, no, we're getting hit again. So it tells you where a little bit of the mindset of the person on the street is right now. I think it's a combination of hearing about not only the rise that we're likely to see in the COVID-19, that resurgence, but also as it deals with the social unrest that we've got going on, increasing those chances. So people are out there buying stuff again, which is very, very interesting dynamic to me. Dick's, we could talk about Dick's in just a second. Give me 2 more minutes on this slide, and then we'll jump into your ticker symbols and questions. So let me pop back over here. So there was a question here. Where can you see volume going up daily, weekly? Watch the daily volume when you are watching when you're looking at that RSI. Weekly, I don't care about. I care about daily volume. I want to see consistent daily volume. So very quickly, let's go back, return to the slide. That Nasdaq 100 in overbought territory. It tends to continue to get overbought, but watch that volume for a drop. Same type of volume activity on the S&P 500 that I watch. So we're seeing that market begin to be split. The technology leadership decline is in a decline over the last week. It's kind of pulling back. The late day rallies have brought those stocks back. This is a situation where, quite frankly, I want you to look at some of the leadership in the sector and keep in mind that as soon as those stocks start to turn, that is when it's going to be time to start putting on those protective puts. I am planning on adding puts to the portfolio this week, definitely in the night trader portfolio, as well as my personal portfolio. I just think that we're, a few steps away from some sort of, I don't want to say an incident, but put it this way. You have the Fed, you've got earnings that have dropped off. You've got a Fed meeting this week. You've got oil that's obviously going to rally and pull money away from some of the equity areas. There are a lot of things going on with this market. And I think at some point we're going to see a moment where it's going to be suspended in that animated, kind of like the Wile E. Coyote, where he's hanging over the cliff holding that sign saying, oh no, that type of thing. So watch all of that this week, and that's going to be your take for the trade. I think that we finish this week flat. I don't think that we have a strong week this week. And this is one of those where we can come back and make fun of me on Friday if you like. But at the same time, this is where, when I look at the tape and the way last week finished out, very strong. We're going to start strong this week. I think you're going to see some profit takers start to come into this market. So on that, the next area we're going to are your slides or your questions, and you've got a couple of them here already. Let me jump up to them and start going right now. The first one I see is Dick's Sporting Goods. Everybody knows that this is kind of one of my main street stocks, held back at that 40 level. It's overbought right now. It's doing a little dance around here, the 36, 40 level, simply because it is trying to get the gumption, if you will. And look at the volume here. This is what worries me. I think we could see a little bit of a pullback, a rest, a pause that refreshes, if you will. This is an example of that RSI being oversold and the volume going away on the stock, and you see it not being able to go through that 40 level. Watch Dick's for a little bit of a pullback or consolidation around 36. Get that RSI down a little bit, and then you look for the move above 40. They are doing well in terms of business-wise, and obviously starting to get a little more crowded. Work is down. Work is dropping. Slack is dropping more this morning. It was down. eSignal, as much as it cost, is not going to give us the isn't that terrible? It's not going to give us the pre-market. It's down 1.6% right now, pre-market. That is not terribly surprising, actually, because again, that trend of seeing the technology stocks that have been down. I think that this is one of those things that we're going to see for the next week or so, as you see technology stocks kind of rotate in the morning to the downside and then come back up in the afternoon. And that's exactly what happened with not only Slack, but also with Datadog, that the night trader people know about from, again, our trading activity on Friday. Zillow. Love Zillow. If you read anything about them over the weekend, they're seeing a surge in activity. I'll tell you myself, I am in the process of selling a house, my first house, actually, my primary residence right now, and very active myself on Zillow, but hearing good things, and this is kind of odd, hearing good things from my realtor about Zillow, about how much it's helping them right now get bookings. And it was good when we were going through the coronavirus or the COVID-19, the shutdown, if you will, and you can see how well it surged. The stock's trading, what are we? We're up 50, no, my goodness, 100, I was going to say 150, 183% at this point from its March lows. And that's because they adapted very quickly with their 3D online showings. You could actually do the virtual showings with a realtor. Zillow is going to continue to move. Watch it though. The housing market is kind of on probably the 8th inning, maybe the 7th and bottom of the 7th in terms of a 9-inning game here, in terms of how far it's going to go. Expect it to slow down. This is probably going to be the last good selling season for a little while, as obviously there are signs that the economy is going to slow down. Jesus, the VIX is going up a little bit. I have been watching the VIX on a daily basis at 25 level we talked about last week. Here you go. There's the chart of it. We bounced down to 24, back up to 25 again. That RSI, and the RSI does work on the VIX. The RSI is telling you that the VIX is trying to make a move a little bit higher right now. If you want to play volatility, you can use the VXN, which is the ETF, or the ETN. It's an exchange traded note. Or you can do options on the VIX. Remember, I pointed out last week that they expire on Wednesdays, so the expiration date is going to be different than the expiration date that you normally see on any of the equity options that you're trading. JP Morgan, Jerry. JP Morgan does continue to go, and this is one of the areas of the market that, even though it is continuing to go, this is a have-not in this market. So just let's use 54% as a basic average for the market being up. You're up 45% with JP Morgan. If you look at Bank of America, pull up the Bank of America chart right now, you're actually up from that bottom, and I'm going all the way to the bottom there. You're up 54% there. Citigroup, So these are market performers right now. If you've got a market performer from a sector that should be leading, Citigroup, 83%. Now you're talking. Wells Fargo, I think you guys know what this chart's going to look like. It's gotten a bump here lately, but certainly has done nothing but continue to go down. That's their fault, not the market's fault, though. My point is, watch the financials. The financials are supposed to be leading up there with technology stocks. When you look at the Nasdaq 100, my perfect scenario for a rally that's going to last is to see the Nasdaq 100 being up 40%. I didn't grab the bottom there. I'll grab the actual bottom. So we're up 45%. Have the XLF and everything else up the same amount at the same time. So you want to see them moving lockstep, not this little dance that we were seeing from the financials. And the financials are closing in on that. Actually, they're above that right now. 49% is where they are. So you want to see them moving in lockstep. And that's why we've had this stronger rally for the last couple of weeks, because the financials finally stepped in and started participating. Watch that very quickly, though, or very closely, though. Let me go through a few others. DG, and we'll go to about 925 here today, folks. Dollar General pulls back to the $1.84. Notice the overbought there. I like it around this 180. I think we'll see a consolidation and a bounce higher. The discounters are still very much alive and well. I got to give you Ollie's, you know that. Greg and I have been talking about putting together a discounters index, where it's just an index that we can use during the market open or at Monday morning. We could use it just to refer to this. But there's your picture of Ollie's. And then obviously in the same breath, we have to bring up TJ Maxx. There you go. TJ Maxx breaking above the 56 level on Friday, and look for it to continue to break through 60 and continue to go. You've got calls on both Slack and MDB. That is good right now. I like both, obviously. And Slack is, even though Slack is coming with a little bit of a weak open, I think that you'll see the stock continue to come back. We saw both of those stocks come down from an earnings report last week, a little sell the news. MDB's up 0.3% this morning. Slack is down a little bit more than 1%. Watch this throughout the day. I think we'll see some strong activity from these stocks over the next week or so. ENPH, NFI, or Enphase, I'm sorry. I always try to call it N5. $50, look at that bounce. Coming, actually starting to rev up. I like the energy complex, if you will, here. Enphase a little bit outside of that, the normal, your Halliburton, et cetera, $50 support here. I think you got to look at what happened back in February, rather. Yep, here's your February. Watch this for this $50 to hold. Even though we're off that overbought, you've got the 20-day that turned down right now. I think you got a pretty decent chance you could see a test of that 50-day here over the short term. A put on this at 54 down to the 46 is going to actually yield you some pretty good results if that were the way you were going. I look at this as a probable test of the 50-day, and that's what we saw back in February. Little different circumstances in February than what we're seeing now, so you could have some more support. This stock is not out of the woods, let's say, over the short term, though. We're hitting all of the I'm going to grab a few from these. Valerius, I'm sorry. I always try to call it Valero instead of Valerius. Let's, you guys know my rule. One-day moves like this, it's hard to buy. It's very hard to buy in to a move like that is going to eventually probably reverse itself. This is one of those that I wouldn't be touching with my one of my sullied friends' money. Rig, on the other hand, if we continue to see oil prices move up toward that 50, you're going to see rig really start to come to life here. $2.50 on Friday. I'd look at that crossing above $3 if oil continues this trajectory right now. Is that supposed to be booking, JM, or ducking? We hit the banks for Paul. I didn't hit Goldman, though. How did I miss out on Goldman? So Goldman, obviously, usually one of the best in breed. Stock's trading up 67% right now from the bottom, making its case for this. This is a much more consistent move, kind of like much stronger than what we saw with the financials. I like the move in Goldman Sachs. I have to put it in the category, though, when the financials turn, Goldman Sachs is going to turn just as much as they will. Real estate. You know what? If I'm going, NYMT, I do like, actually. If I'm going with real estate, it's two stocks. It's Zillow and it's Redfin right now. I like New York Mortgage Trust. This is one of the companies that, with interest rates lower, and you got to watch rates, especially they're creeping higher right now. So you might have some of that tailwind taken away from the real estate trade just because of the interest rates going a little bit higher. I do like NYMT. I do like Zillow and Redfin RDFN. On the real estate side. Naveed, I can't tell you what the best 5G stock is, just because it's so hard to figure out which company is playing in the 5G zone, and that's not something way to skirt around it. It's just, this is such an evolving area of the market right now. I still like NeoPhotonics. I think that is one of the companies that obviously is playing around in that. And I don't want to say playing, they are part of that 5G trade. It's a semiconductor company, but they're also doing things that are associated with 5G, the high-speed data transfers, etc. Look at it as it approaches $10 right now. This is the one that I've been playing the most. And when I look at the cannabis, there are two. I like the Canopy Growers, CGC. It's been a little bit sleepy here lately. Tilray has started to take off as well. I think that the cannabis companies have, and 2 weeks ago when we started talking about cannabis is when we were making this run. And I said that you got to watch the cannabis stocks, because I think they've turned from a growth industry into one that really is no longer got that huge growth because of regulatory issues and because of, quite frankly, a saturation in the market that wasn't there 2 years ago when everything was taken off. So watch these stocks. Cronus is the one that's really been popping here lately, though, and garnering some attention from the traders. Cronus has got a little bit of a trend that's starting to pull into its place. It's coming off that overbought. Watch for it to break above $7. So when to close a 35 Dix call? Well, when it's made you money, Naveed. And I'm not saying that as to be smart, but so right now the stock bouncing $38. Watch for it to continue to go up towards that $40. It is overbought by what I said earlier. Watch that volume. If we continue to see the volume, I think that a pullback to 36 would be doing good. If I had a decent profit right now on Dix, I'd probably be just closing it out, taking the profit. And with that overbought and volume lightening up, you can see a little bit of a reversal here. James, cruise ships, airlines, everybody's going up. American Airlines opening up another 7% after a blockbuster day on Thursday and Friday. Friday sold back off again. Watch this sell-off to come back here in short order. This is people getting in because you've got a confluence of events going on right now. You've got Las Vegas reopening. You've got some of the cruise liners taking bookings now for August, September. You've also got New York City starting to open up. So you've got a lot of these destination places that are opening up. I myself have been looking at some of the bullish trades in the airline sector. I'm trying to find something a little bit like in the lines of a Delta Airlines. It's not jumped up 20%, 30% in 2 days, 50% in 2 days, 78% in a week for United, or for American rather. And again, my favorite, slow and steady here. And slow and steady wins the game, but look how much less volatility there is in that chart. Southwest Airlines still saw it sell off into the close or into the afternoon on Friday. After a big open, you're going to see a big open for it today. This is people getting back on the bandwagon of travel coming back in. It's going to last for a little while, but it's going to be a choppy trade. Dave, Zoom, and I've got time for a couple more here, and then we're just going to have to carry them over to tomorrow or something. Zoom, watch it at the 200 level. It was a little, let's see what it was. It was down 1.2. That's down 1% right now as we head into the open in 4 minutes here. Zoom's still looking like it's going to pull back from that 200 level. It kicked off of it on Friday. I've still got, personally, I have a position in it that is targeting somewhere around that 180 level. That's currently a little bit profitable, and hopefully I'll just close out as if I get a sniff. And this is the thing with Zoom. This is such a crowd traded stock right now. If you get a sniff of that buying, and look at the volume that happened on Friday, it was very light compared to everything else. So I don't think that this is a confidence move up back up to that 207. Look for it to bounce down to 200. If it cracks it on a close, you're taking a trip down to 180, which is exactly what I'm thinking. So any questions, make sure I get it pointed out since Greg put it up. You've got the mailbag, the moneymorning.com team mailbag address there. Go get that. Greg sends them to me. We get to read them. We get to put together some content on them so that you can read about it on the website as well. Good to call out. Good you call out the tickers. All right, good. I'm glad to know that. I like calling out the tickers too. That's old school for me. Let's do 2 more here. Sorry if I don't pick yours, but question list. I'm sorry. We've got approved questions. My gosh. Testing question. Let me get to some of these testings. I'm sorry, guys. We should have hit these before. Naveed, we did the 5G stocks and the cannabis stocks. Wayfair, look at this double top here. Double top, technicians don't like double tops. 190, 190 on Wayfair coming off. I'll tell you what, look for Wayfair to test out the 150 level. Visa's going to go as the consumer goes, and the consumer's going well right now. Looking for to break above 200, probably right up to 210. Maybe challenge this top up here before it starts to reverse. When the economy starts to slow, Visa's going to be one that you want to get out of. Or wait until the economy starts to slow. PetsMed Express, one of my favorites, still in a position pending or holding on this 50-day kicking in last week and giving the stock a little boost on both Thursday and Friday. I'm looking at Pets right now to still take out that 36 level, give us a run up to 40 is my target on PetsMed Express. So that's why we're still holding that in the next few weeks. We are getting close to expiration, and Theta is going to start to pull off of that option. So I may roll that out. We'll cross that bridge when we get there. Where do I see the airlines going from here? Short term, midterm. Short term, let's call that this week. I see the airlines continuing their run higher. I think you're going to see it a chop trade like you did on Friday, where it opens higher and then you see people day trade it down to the close. This is going to be a trading area of the market for the next couple of weeks. So increased volatility, increased moves are going to be substantial, as we saw with United American last week. So there's potential for some big moves there. It's going to be very unpredictable. You're not going to see airlines continue to follow just a straight trend. It's going to be chops all over the place. So watch them very closely. If you've got a outlook that goes out more than a couple of days, then you're probably going to want to do something either with and this sounds weird, but to hedge over a couple of days is a weird thought. But if you've got a profit, go ahead and hedge your profit out if you want to continue to hold. I would more look at this as a day trading type of sector right now. Get your profits off the table every single day and go in the next day with a revived look, simply because I think you're going to see this message change. And obviously we still have some things coming up. I mean, you're going to see a lot of pilots get fired in September and a lot of things that are going to be not great with the airline sector. And obviously the restart, how well this restart goes. Good rule of thumb on closing out call put options: close 520, 30 days before a month expiry. I'm not sure what you're trying to say there, Zachary. I think what you're talking about is avoiding time decay. And in that case, yes, 30 days. If you bought it 3 months ago, you want to be out typically. Actually, if you bought it 2 months ago, you want to be out a month before. Your theta really starts to kick into that option position and strip it as you make it through the second half and really the second 2/3 of an option position. So you want to be out in the first third of your holding period, is the way that I've looked at that. What's the best bio stock or ETF to own right now? IBB is the biotech stock or ETF that I've been sticking with. Eli Lilly, One more after this, Eli Lilly. Oh, you're looking, I'm sorry, at Callahan. Absolutely. Callaway, I think you've got room to run above 20 on Callaway. This is still going through its reopen phase with Dick's doing well. So yes, Callaway still bullish. The 4% move on Friday, I think you find that is going to be matched with another move higher this week. And then Boeing. That'll be nice to hit Boeing as the last. Still going to 300. Yes. I believe Boeing is still going to 300. News is only going to get better as the airlines start to get up in the air again. You'll see orders. Hopefully, their net orders, in what I mean by that is the cancellations, are done, and we're going to see that net order stay level. I don't think you look to find new orders coming into the system at any rapid speed right now. But I think Boeing, we talked about so many times the 120 area being the spot where you wanted to buy Boeing, and now you're at 220. 300, I think, is going to be on the rise in here in the next probably month or two. So watch Boeing very carefully. That's going to be it, guys. So thanks for hanging in with the early technical difficulties. We'll see everybody tomorrow, 8:45, same time, same place. Less technical difficulties tomorrow. We'll be more fluid. And remember to send any questions that you got to the mailbag. We love getting the questions, comments, anything. Tell me how we've helped you. Tell me how we've hurt you. I hope we haven't hurt you. But tell me how we can make things better. Anything to make it better for you. I wish you all the best, the trading success, and look forward to seeing you tomorrow. Bye-bye.